It's been a year, a freaking year. Longest and shortest year of my life, but a year where I started living on my own again, became a single mama, got a year of resurrecting my business, this YouTube channel. I mean, it has felt like the days were so long, and yet now that I think back on everything that has passed and happened, I'm like, dang, that feels so fast. Crazy how time can do that to you. This is a little bit different than a lot of the videos that I record normally because I'm going to do a little bit of a life update, but also I was reflecting a lot about all of the big money decisions I had to make in what I would consider the most difficult emotional time of my life, and how no one really talks about, how to manage or navigate financial situations when you're going through an awful transition like death of a family member or separation, a divorce. Oftentimes we focus a lot on like happy things like how to merge finances. But even then, like no one really talks about how difficult it is to manage your finances whenever you're feeling like any kind of emotional stress. And so that's what today's video is really going to be about, just the things that I am grateful for that I knew ahead of time in terms of money and money principles. And then things I wish I would have done differently, things I didn't really anticipate. All right, so I'm going to say something, and I imagine it's going to trigger some people, but just know that I'm speaking tactically here, and I'm trying to give you some really good non emotional money advice for an awful time of your life. One of the things, because like I said before, I wasn't prepared for how emotional it was going to be to separate and restart my family this way. I will say that what benefited me was retaining an attorney right away that would prevent me from making emotional money decisions. So I will tell you that I had all kinds of heightened emotional states during my divorce, from like I was so angry, then I was super sad, then I felt very overwhelmed. I felt despair sometimes. I mean, it was such a challenging time to really get a good grasp of what my overall feelings were. And I will say that because I didn't have like the best state of mind, having somebody who had my best interests at heart, who was non-emotional, who understood the law, so they were going to keep me very rational about what was possible and not possible, was so beneficial. You have to remember that a divorce or a separation, it is like a lawsuit, right? And there is a defendant and there is a plaintiff, and it's not the same side, right? If you were on the same side, you would still be married. And those things, like for you to understand right away when it comes to negotiating, very important, because what happens in your divorce will have an immediate impact on you financially, but will also impact you a year later, 3 years later, 5 years later, up to 10 years later, gosh, your whole lifetime, depending on how you negotiate in this process. At the very beginning of the divorce proceeding is very similar to a home loan process. You have to gather all of your financials anywhere between 2 to 5 years, depending on your financial situation. And this is, while it's annoying and tedious, it does give you a chance to really review all of the money that's leaving the household, because there is a division of responsibilities normally in households. And so you might not be aware of what it costs to maintain the pool or the landscaping, or how much it costs to get winter landscaping, or when the appliances need to be changed out and things like that. And you'll really be able to gauge how much the other person is doing financially, and how much money you have been paying, and really make a decision on if your current housing situation makes sense for you. Where you live is probably the most emotional piece of negotiation, and it's one that has the biggest impact to your finances. And right now, where interest rates are under 4% for most people that own their home, the low interest rate is like a hot commodity in divorces. And so whoever ends up with that low mortgage, I mean, there's a couple things you have to think about. Can they release you from liability, right? Or are you going to have to maintain part of those payments so that they can stay in the property? Is there a time frame when that person's going to be obligated to refinance, and what does that look like? If you're the person that's vacating, how does this impact you? Because you want to come to the most equitable resolution as possible. So things that I see that most people are unaware of is, people want to stay in the house because they believe that it's going to be the best thing for their children. And I understand that. I had toyed with staying in my previous property. I just looked and I was like, you know what? Based on my goals today with having to replenish my investments and my retirement, and I just wanted to downsize. And so selling the property for us made the most sense. But let's say you guys, one of you decides to keep the property. Let's say you both can afford it. Who gets to keep the low mortgage? And is it even possible? So one thing to look into is called a release of liability. And this is where you call the mortgage servicer, you explain to them that you are getting a divorce, that one person is going to retain the property. They will either at that time allow that one person to assume it in case it's a VA or an FHA loan. But in some conventional and jumbo loans, there is this thing called a release of liability where the bank actually releases the party that is vacating the property from legal liability. So that is something to definitely ask about and press upon. I know it's difficult sometimes because you talk to one customer service representative and they may not be aware. So definitely get this issue escalated if you're told no. Not every mortgage company does it, but it is something to look into to prevent you from doing a refinance. Now, if you are somebody that is vacating and has to purchase at higher interest rates, one thing for you to consider is an equalization payment. So something that will offset the cost of closing costs for you, the cost of buying down your rate. It's important that you get compensated for that because there is a financial penalty to you having to do that might not have existed in other markets. And so really important that you consider that, again, if you're trying to get the most equal resolution as possible. Other things to consider when you're talking about, and this relates to mortgage and divorce, is, well, if you stay on the loan, you do have legal liability to making that payment per the credit bureau. So they don't just take you off of that loan, even though your divorce settlement says that somebody else is responsible for it. So if they do not make the payments, the credit bureaus will report you delinquent. So that's one thing to really consider, because you don't want to stay on a mortgage if you don't trust the person. If it was me, I wouldn't want to stay on the mortgage at all. So you can always, but not everyone is in a financial position to refinance right away. And so you want to make sure that you have a time frame with a reasonable resolution that allows that person to refinance. So there's reasons for why sometimes it's value, sometimes it's income, for why someone may or may not be able to qualify. But it is something for you to think about. Other things that can impact your overall ability to buy a home if you're going through a divorce is if you are somebody who is receiving child support or alimony. Those items have to be received for a certain length of time, and they have to be ongoing for the next 3 years, starting from the first payment date of the loan. So oftentimes what I see is that time frames for the length of alimony aren't long enough, so we aren't able to use that in the home loan, or they haven't received it for long enough, or some things like child support are inconsistent in payments, or it's just like a verbal agreement. You want these things stipulated. You want the proof to come through a clearinghouse. You really just do want to make it as clean as possible for your ability to qualify. One thing in high net worth divorces or divorces where there is an equalization payout, because somebody owned a small business or because there was some settlement, you can always agree to create a trust that's funded versus you getting this large settlement. And if you were to create a trust and start getting a trust distribution, this can actually be used to help you qualify right away. If you guys have questions on that, let me know. Now, on the reverse, if you are the person paying this out, these things count as debt liabilities against you. And again, we can only omit things that have under 10 months of payments. So if you're going to be paying child support for the next 14 years, that's going to be a debt that we count against you, even if your ex-wife is like, oh no, I don't need it anymore. And we have lots of situations where we see people are very amicable and they just have a verbal agreement to just let things go. Whatever is on paper is what rules the loan. And if you are delinquent, just know that they can send you to collections. There's all tons of legal ramifications, not to mention penalties and interest. So you do just want to make sure that regardless of how great your relationship is, you're just keeping everything to paper the same way that you would for a creditor. I personally, as somebody in finance, do not want to remain on anyone else's debts. So any accounts that we had joint had to be closed, which will have an impact on your credit, which does stink. But guys, you do not want to be legally obligated for somebody else's debt. You have no idea what happens in their lives. And if they start making those payments late, that will be much worse than having whatever short-term penalty you will have for closing the account. Now, when it comes to assets and the division of community property, you're going to want to talk to a lawyer or the mediator about that. But just know that most states are pretty black and white about this. And one of the things that I realized right away is that I was going to be spending a bunch of money and time and emotional stress trying to fight something that was very clearly defined in the law. So right away, I divided all the assets so that that was no longer something that we were going to fight about that would belabor the divorce, that would ultimately making it cost more and making it more emotional. Now, one thing I will say is that because the divorce proceeding is very up and down, if you choose to acquire new assets during your divorce and let's say you reconcile, you just have to realize that everything is up for grabs again. And so you just really want to, again, like I said, make sure that you are getting the proper legal representation that will help you protect it. I will tell you that nowadays I moved everything into a trust and I just really have my assets protected in a way that I wouldn't have normally done without having gone through this. Now, I want to talk about my post-divorce life and what it looks like. So, a couple things when you are managing your finances on your own, it's super important that you pay attention to the budget. We grow accustomed to living lives. And I will say that adjusting to this new life of mine has been something I've had to pay a lot of attention to. So instead of doing my budget once a month, I've actually moved it to the 15th and 30th. This was a change I've done several times in my past when I'm really concentrating on budgeting. I also stopped using a credit card and really started focusing on just like paying a lot of things with my debit card because I really just wanted to reduce my mental spending. So whenever you use a credit card, just it doesn't work the same way as when you're using a debit card. A credit card, there's just like no mental limit. Like you shouldn't really spend, but because it's like a free for all, you have like unless you're maxing it out, you don't really stop. And a debit system makes you acutely aware that you are taking from the account every single time, and so you're more cautious about spending. So those were just some minor changes that I made to just start getting me more accustomed to living in a lower lifestyle. And then I have put in a bunch of focus on just trying to rebuild my assets. And so when I'm in a time of like trying to get out of debt and then save, I try to get my living expenses to be under 70% of my net take home income. I apply 20% towards debt reduction, and then I apply 10% of all of my earnings directly to savings. And so that's where I'm at right now. I mean, I probably do about like 20% to savings and 20% to debt, but that's where I'm at. And it's really helpful and it makes me stay really disciplined, but it is the strategy that I've implemented like right when I got out of debt in my 20s. I've done it several times throughout my life and I'm doing it again because I know it works. In this stage of my life, because mortgage market has been decimated and I'm just not earning the same way that I was previously when I was able to work like a million hours. So I'm trying to be more creative about ways that I am making money, ways that I can make money passively. So this next year, I'm going to be looking into rental properties. I have a lot of dividend paying stocks that I use. This YouTube channel is a way for me to earn some passive income. I do some coaching and I also do some content creation for business strategy. So there's a couple of ways in which I have decided to just kind of diversify income earnings to bring them through to the household. But I will say that if you could not do something like this, there are other ways of decreasing your expenses. So is it possible to move in like a family member, like mom or sister, that can help offset some of the rental and the utility payments if you find yourself strapped or you're just really trying to accelerate, replacing some of the assets that you lost? One of the other things I will tell you is I try really hard, especially when I'm emotional about money, not to make any ego-made decisions. So I had to be really practical about furnishing this house and replacing some of the items. So I actually bought some of the used furniture from the sellers. I mean, obviously I had it cleaned and they live in a nice area, so they were nice items, but I could pay a discounted price for them and I didn't have to replace everything all at once. And so being able to do it little by little and still being able to live here and function here has been super helpful for me. I cannot tell you the number of people that make very emotional money choices after their divorce, whether they buy brand new cars or they go on these lavish vacations, they buy boats. I mean, it's so nuts. And just remember, guys, that yes, it's painful. And yes, we want to, YOLO. If you're looking for the best moves financially, the best moves financially are to make sure that you stay out of debt, make sure that you replenish your assets. And then just remember that it is a slow building vision and not just like from here to tomorrow. Whenever you make rushed decisions in any capacity, I promise you it bites you in the butt. If you are somebody who is either finding themselves in this position, trying to figure out what to do, here are a couple things that I would tell you. first and foremost, do a full financial audit of yourself and your household and make sure that you truly understand the state of your finances and what it's going to take for you to move forward. If you are in the stages of just thinking about a divorce, this is something that I would do when you are non-emotional. And I would get into really good practices of looking at your money management, right? Is it once a month, twice a month? Is it weekly? How are you going to get really prepared for watching your finances? Number two, I would absolutely not make any same day decisions on anything that has to do with money. Anything, any kind of decision that I wanted to make, I promise you, I would change my mind like 10 different times. And I had a great attorney who made me wait a week. I have now implemented that into my life on like every kind of emotional thing I have. I'm not responding same day. I'm not even responding within 24 to 48 hours. If it's really emotional, I'll wait on it. Okay. So that was super helpful. I would also really just get a good picture of what is doable 1 year, 3 years, and 5 years, and make sure that you are not setting yourself up for failure in your divorce negotiations, right? So if you are the person that needs like financial assistance, I want you to pay attention to that. And if you're the person that's paying out, I want you to pay attention to that. Do what's right and what you feel is right in your heart, but also just make sure that you aren't making an emotional decision because you feel guilty, and one that you will be angry about in a year, 2 years, 3 years, 5 years, or your whole lifetime for some people. Okay, so we just got done talking about a lot of tactical things that have to do with high stress situations. And I'm like you guys, I hate talking about my divorce. I never want to talk about death. I never want to talk about these unpleasant things, especially when it relates to money and emotions. I want to wrap this up with just giving you a life update, because it's important that if you find yourself in a position like mine, like what was helpful was to hear how people made it through and how they were doing, a year later. And I will say that a year later, I'm doing great. And I'm not just saying great for the sake of great. I am the healthiest, both emotionally and physically, I have been in like, I don't know, a decade. I really feel like I have the deepest relationships I've had with my kids and with my friends. I feel present in my body. My business doesn't look like what I want it to look like. Some of that's the market, and some of that is because I did take a lot of time off, and because I'm also not willing to make the sacrifices that a younger version of Lizy was willing to make. But it is exciting to think about what my future could be like. And I wouldn't change anything that has happened the last like 2 years, because it's brought me to this place where I feel so deeply connected to God, my family, myself, and I have a lot of excitement and hope for my future. And so I hope that gives you hope. And if you guys have any questions, or I didn't touch on something that you really wanted me to touch on here, I'd be happy to share. I mean, I'm an open book, and I really just want you guys to be successful at life, home ownership, money, you name it. So thank you guys for tuning in. I super appreciate you, and look forward to seeing you on another video.